Honest with you.
Hey guys, I'm with my good buddy Jack at Nobody Special Finance, and I'm having to use my cell phone and my headset that I use in my welding truck because my mic's broke. How you doing, Jack?
I'm doing good, Chris. How you doing today?
I'm doing good. I heard Jack talking today about he sold as much stocks as he's ever sold in that short amount of time. Is that right?
Yeah, actually, the last 2 days, it's the most stock I've ever sold in my entire life. Up until this week, the most stock I'd ever sold was when I cashed out a lot of my investments to buy my house that I live in right now. And that was a pretty big event for me. I moved a lot of money around. But what I did over the last few days even blew away even that. I moved more money out of the stock market in the last 2 days than any point in my life. I think we're that close.
Well, when you mean close, you mean collapse?
Yeah. Let me preface, everything by saying I am usually early. Okay. So take everything I say with a grain of salt and all that typical standard CYMIA stuff about not being a financial advisor and all that. Don't buy stocks or sell stocks based on what you hear from a guy on YouTube. But I have been in cash raising mode really since the fall, where I've been getting out of some of my longer term investments. And I've been rolling a lot of that money into things like commodities, into precious metal miners, into energy, and those things have all done really well. But when I was doing some research for a video last week about things that are happening to the banks in particular, about their commodities exposure, and a lot of like what we saw with nickel a few weeks ago, where JPM just rigged the nickel markets because they were looking at $1 billion loss from this massive nickel short that they had underwritten. And, as it was, they only lost about 120 million instead of losing the full billion. But as all these commodities are going up and up and up, all these companies that are usually short these commodities, like the producers, the foods companies, the farmers, even the miners, they sell forward all of these commodities that they produce, i.e. they short them. Well, the banks underwrite those shorts. And if those shorts are unable to cover, like we saw with Mr. Big Shot in China with the nickel, and the banks are on the hook for all that money. And I'm seeing warning after warning from bank executives. I'm seeing people in Europe are talking about bailouts from the ECB. Energy traders are asking for, what are they calling it? Emergency liquidity assistance, which is long speak for bailout already. And they're using a lot of language eerily reminiscent of the beginning of the pandemic and the global financial crisis. And as soon as it starts in the banks, once the banks catch the cold, forget it, the whole market goes with it. And on top of the rising rate environment and all the other indicators that tell me we're near calamity in markets, when I saw it was coming with the banks, and then I knew we had that monster CPI print coming earlier this week, and now JPM reported today, terrible earnings from JP Morgan. We got a whole slew of banks are going to report tomorrow, which I guess will be today, probably by the time this video goes up. I'm not sure. But we've got Goldman, Morgan Stanley, Wells Fargo, PNC, US Bancorp, all these other banks are reporting over the next few days, Morgan Stanley. And I think it's going to be one after another bad news from the financial sector. And okay. I think that's what's going to start this cascade. And I don't want to be in the market when that happens. I want to be in cash when that happens.
Well, it's probably, I would think, tell me if I'm wrong, it's going to drag the miners down with them. When everything does bad, everything kind of does bad at first. Does you think that's right?
A few weeks ago, I probably would have agreed with you in that statement because, like I saw in early 2020, when that crash happened, the miners, everything, everything got sold off along with the market. But I'm actually seeing miners are looking really strong here. A lot of the mining ETFs that I follow pretty closely, like GDXJ, SILJ, they've all broken out of this 1.5 year long downtrend that they've been stuck in. I mean, technically speaking, I'm not a great technical chartist, but technically speaking, they look great here. And it all depends on the location. I think is going to be important. It's going to be a stock picker's market. If you're in a miner that is in a geopolitically vulnerable area, right? Like a miner that's got a lot of operations in Russia, or things are very bad in Peru right now, and you have a leftist government that seems intent on nationalizing everything. Mines in those areas could be vulnerable because they've already sold their metal that's in the ground, right? Routine hedging, these companies all short gold and silver. It's nothing nefarious. It's just routine operation to protect against market swings. Well, if something happens geopolitically and they can't access that metal in the ground in the future, and they've already sold it, now we're into a short squeeze play where actually some of the miners could be hurt by that. So pick and choose your miners, and you want to make sure your miners have operations in food and energy secure regions, politically stable regions, i.e. the U.S.
They will get nationalized. A lot of these, when this thing happens and people run, Doug Casey said it best when he said it's going to be like fitting the contents of the Hoover Dam in a garden hose. When people run to sound money,
it'll be too late.
Countries are going to nationalize silver, gold. They're not going to just let somebody run them. That happened to Robert Kiyosaki. He had a gold mine in China, found a bunch of gold. They were getting ready to mine it. China said, "You're polluting the water. It's ours."
Yep.
Get the hell out of here. Just that simple. So that's why it's so important to be in friendly, Canada, US, and that's even up for grabs. You don't know. We do not know what's about to happen. And I had a comment. A couple people have been asking me to name some miners that I'm involved with, and I'm skeptical to do that. But what I'm going to do is I'm going to make a list. There's so many of them. It's probably over 50 that I've got a small position in, because I believe when this thing happens, even the bad ones are going to do good. All boats rise in the tide. So it's when the tide goes out and you can see who's swimming naked. So that's why I have a small allocation in a lot of different junior miners, and I'm going to probably post it on my community page. So be on the lookout for that. That'll be all the ones I'm invested in.
Excellent. I like to play the mining ETFs mainly because to do it and a really good DD on a mining company just requires hours I don't have. You got to know the CEO and his track record. You got to know where the mine is, what kind of deposits they're looking at, what type of deposit is, can it be profitably taken out of the ground, what's the geopolitical risk where they're operating, what's the financials look like of the company. I mean, there's so much research that goes into picking a good mining company. It really is tough to do.
Did you see my core sample?
I'm sorry?
Did you see my core sample? I didn't mean
you have a core sample.
This is a silver core sample from BlackRock. And it is heavy, like it's got a big bunch of silver in it. But anyway, I didn't mean to cut you off.
No, that is cool. As far as you got the best paperweights in your shop, man. I just looked around. You got the anvil. You got that beautiful 100-ounce angle hard sitting there, man. That is nice.
Yeah, I've got some paperweights.
But back to the point I was making, with the mining ETFs, you don't get the home runs like you get when you nail that really good miner, but you also don't get the strikeouts that if you pick the wrong one, you cast a wider net, you're giving away some of your upside to moderate some of your risk. And it's done pretty well for me. Could I do better if I put a lot more time into researching and trying to pick an individual miner? Almost certainly. There's so many things competing for my time, namely this channel. So I've done pretty well with the ETFs up until now.
Yeah.
I'm on a mission. Metal ETFs. I don't touch SLV. Sorry. I wanted to clarify that.
Yeah, no. Well, I don't want to keep this too long, but I think it's really important that people realize that their 401k, we've got a lot of 401k millionaires that watch us every day. We've got a lot of people that, don't have any precious metals because you can't eat them. I don't really understand that. I mean, I do, I guess, but I said it in the last 2 videos, but it really stands out to me that in Venezuela, the price of eggs went up 15,000x, not percent.
Wow.
But gold went up 25,000x. So, wine was 8,000x. Apples was like 6,200x or something. Yeah, they kind of compete, but you can only hold so much food. It seems like it would be really smart to have both, and the speculation of a lifetime could possibly be gold and silver miners.
Yeah, and you mentioned these things that did so many X's in Venezuela. The Venezuelan stock market is another thing that did that. You know, tens of thousands of percent increases.
59,000%
Well, hey,
in the stock market.
great. But you know what? Even that did not keep pace with inflation, even the Venezuelan stock market. So, you know, people like to make fun of the precious metal investor, right? He's yesterday's conspiracy theorist, and you have to be careful using a term like conspiracy theorist because these days, this is 2020s. It's like daring them to be right, and you know because we've never really lived through an event like I think is coming. I think the GFC, global financial crisis, could pale in comparison to what's coming. I really do, and I think what happened with the pandemic with all the money printing only delayed what would have happened otherwise. We're basically right back to late February, early March of 2020. That's what it feels like. Like we're right back where we started. The only difference is now we have this huge inflation problem on top of this spiraling debt crisis. And in a lot of ways, the inflation problem is now making it worse because the inflation and investors fleeing into commodities is what's driving this problem in the banks, which is what's going to cause all these problems in credit markets. And, you know, when that happens, I'm not sure those 401ks and those IRAs are going to be safe. I mean, I still work my day job. I still contribute to my 401k. I hope it works out all right, but that's not my only option. And I still have my physical precious metals, my cryptocurrency, and my investments on the side because if you wait until that starts, it's too late. It'll be too late. If you go out and try to get yourself some gold and silver when the S hits the F, you will find that the premiums will be approaching infinity and that there is no inventory. The shopkeepers will pull everything off the shelves and they'll wait for the dust to settle to see what the fair market value is.
Well, you know, my big plan is to trade this for crypto.
Outstanding.
I think I'm going to, you know, it's going to be hard to part with it. That's the problem. The biggest problem with precious metal holders is they don't like to get rid of it. It's their coin collection and they've got emotional ties to it. This is currency. It ought to be, it's money. You know, it ought to be used as money. And when crypto falls out of favor, there's going to be fortunes to be made in it, I think.
You know, I've been looking into
Bitcoin.
I've been looking into actually Kinesis recently. I stopped short of endorsing it. I still haven't done a full deep dive on it. But a lot of people that I follow and respect have, and they swear by it. But Kinesis is interesting because it's this place where fiat and crypto and precious metals collide. And it seems like it's a place where you could very rapidly move in and out of metal and Bitcoin and dollars. So, you know, for a scenario like you described, where you might like to, you know, try to play the ratios, swings in the ratios, right? Like the gold to Bitcoin ratio, or my idea has been to trade silver for gold because right now I think the gold to silver ratio is skewed way higher than it should be. I think the gold to silver ratio should be somewhere
78 or something.
It's in the high 70s. Yeah. It belongs in the 15, 16 range. I mean, that's historically for thousands, hundreds of years, that's where it resided.
There's a good chance it could pass that way up. It could shoot way past that.
Yep.
When silver gets going this time, it might go past it.
Yep.
I'm going to start, though, at 15, and probably at 30, I'm going to start swapping a little bit of silver for gold.
I mean, right now, my approach, 100 ounces of silver for every ounce of gold that I buy. That's my ratio. If I see the gold to silver ratio start to come in, I'll start buying more gold versus more silver, or I may even start to swap out the silver for gold. And then, you know, because I think both are undervalued. I just think silver is significantly more undervalued than gold is. And I also like silver because it's smaller denomination. It's more transactable. If it ever came to a hyperinflation scenario where we're bartering now because currency is useless, it'd be nice to have small denomination silver.
I agree. I've got some right here. If you guys don't know, I know most of you do, but pre-65 quarters, pre-65 dimes are 90% silver. They're called junk silver. And you can hear the difference. This is a 2022 quarter, and this is a junk silver quarter. It's very obvious. That's real money. That's pot metal. And it's easy tradable. You know, it's hard to swap eggs for beans, or, you know, are you barter guys? It makes it easier to, you know, swap things around if you can denominate things. That's what brings it value. I get that question a lot. You know, what brings it value? Well, it's been money for 6,000 years. That's one reason. And there's a finite amount, you know, and we have to mine for it. When you see what these guys got to go through to get this stuff, it's really interesting. But Jack, I'm gonna let you go, man. I really appreciate you bringing your knowledge on the stock market, because I really admire your outlook on the stock market, because it's a lot like mine, except you're a lot more in tune with it. When you say you're early, I'm light years early. I'm like 4 years early. I got into gold miners a long time ago because I knew it was going to crater, and I had no idea when. I just knew for sure I did not want to be late.
Well, you're better off being months, years early than 1 hour too late. So
That's right.
be early. That's all I can tell you.
Well, thanks for coming on, Jack. And thank you guys for watching. And go check out his channel, Nobody Special Finance. I'll put it in the description below. Is there anything you want to say in closing, Jack?
Nope. Just have an awesome day, if I could borrow your phrase.
Thanks, guys. Later.
Later.